All right, so we're into earnings season, obviously. Oh, you played spy puts? You came in with spy puts out, or you put them on today, hoping to what's up, Bonnie? Oh, last night. Yeah, I mean, this market been really resilient. And I think that's where the opportunity is for us. I think looking for long entries. The short, I think, is still tough. Um, I don't know when it gets easier, but I think shorts are just tough here. Shorts in general are always tough, but they're tough here. But going back to what we spoke about last week, we're into earnings season here. Nothing really has changed as far as game plan or big picture that we've discussed. The action and the flow around the action has been really nice, right? I mean, exactly what we wanted and we're hoping for during earnings season. Okay. So yeah, buyers are stepping into weakness. Everything that we were talking about the last couple of weeks, right? If things can go right for us going into earnings season, it can free up some opportunities. Knock on wood, so far, so good. I think the more this market gets away to the upside could be a problem and could put an end to that. But every time this market tries to get a little too cute to the upside, we get yanked. We get these little shakeouts here that come in handy. All right. I mean, Europe already ripped and did their thing. We'll talk about that too. But anyway, and just to catch everybody up to date here, if you weren't around the last couple of weeks or weren't around last week, we are in a period, right? Again, we call it sweet spot because it sounds good. It's, who knows how sweet it's going to end up turning out to be. But we're in a period now where the economy is bad, but not as bad as everybody expected, right? There's some worse parts than others. The job market's been hanging in there, right? Surprising everybody. Earnings, they haven't been good, but they're, not falling off a cliff Mike Wilson style yet. So we're kind of in this sweet spot where you have the Fed has taken, and let's be honest, I think that's the biggest takeaway here. Okay. Is it permanent? Nothing's permanent. Okay. Especially when you're dealing with inflation. But the biggest takeaway, at least for me, and I don't think it's a coincidence, and I'll show you a couple of charts. Somebody else was talking about it. I forgot what house, but the Fed has taken its foot off the brake. Okay. What a lot of people were calling for and asking the Fed to do before they overdid it and break something, and they could have overdone it already, right? Only time will tell. But they needed to chill out. Okay. And whether they tell us they're going to chill out or not is irrelevant. It's the actions that speak louder than words, right? What's the old saying? Pay attention to what the Fed does, not what they say, because they're not going to tell you, especially when they're battling inflation, that they're going to loosen things up. All right. But by any measure you look at, right, as far as liquidity, financial conditions, credit spreads, default swaps, anywhere you want to look, things have loosened up in a pretty meaningful way. Okay. You wouldn't be able to tell it by the overall indices, okay, in the United States, but you look overseas, you look at some of the European markets and the rip in China and emerging markets of late, you could see it better there, okay? But the Fed undoubtedly has chilled out for the time being. And, again, a lot of people were calling for that. A lot of reputable people were saying it's a good time to do that, where the Fed can, without even acknowledging it, can just relax a little bit, see you got some data coming in before the next Fed decision. okay, and let the market and the fundamentals do the work for now. So in other words, if earnings would shit the bed, the job market would crack, or some of the economic numbers start to fall off a cliff, that will do the job for the Fed without the Fed tightening on top of that, right? And they get a chance to look around and see how much damage that they've created, okay? And by the looks of it, okay, at this point right now, and you got the Fed meeting next week, we're not seeing the true impact of the tightening cycle yet. Okay, again, the economy and earnings and fundamentals have been a lot more resilient than anybody has expected. All right, so we're in that sweet spot. You got a market now where inflation's been coming in again up to this point. The Fed has taken the foot off the brake, right, and the economy's hanging in there. That all is a bullish recipe for the time being. Okay, and as we discussed, we're in a bear market. Okay, a lot of the crowded names, right, they're usually the last to rally, the total opposite of what we're used to seeing. Okay, it's the new regime, the new leaders that are the first to start shooting higher and forming uptrends, and we've seen all that. Okay, now what we're seeing a lot of funds and players out there caught flat-footed into earnings season without any exposure to NASDAQ, tech, and growth. Okay, not only that, they were aggressively short these areas coming into earnings season. And what we've been seeing the last few weeks, we're seeing the covering of these shorts, right? A lot of these shorts have been covered, and now some outfits are putting on a little exposure in these groups for earnings. Not much, but it's there, and you see it in the price action in these things, right? Amazon finally started to push higher. Even the crap out there has squeezed aggressively the last couple of weeks, especially the crap. Okay, so we got the Fed coming up next week. All right, and very easily, and already got like Muhammad Al-Arian, who's saying it's probably an opportune time to surprise the market and hike 50 instead of 25, which they're not going to do, but to make sure to keep things in check, because you can see already, right? You can see already, it almost feels like QE, okay? And what the market is pricing in, all right, is a soft landing in a sense, okay? Because here, right, we've been looking at this thing here and what the market's pricing in currently as far as rates are concerned. And you look in July, where's my little pen? All right, this is what we were looking at the last couple of weeks. You look at July, the summer on, and the market's pricing in rate cuts and start to get aggressive from there. Okay, now the market's going to front run that. Okay, in a sense, the market's going to front run that action, and that's what we're seeing. We're seeing a rise up here. Now, forget all that. We've been talking about that. What we need to pay attention to now are two things. Okay, either one, the fundamentals are going to start to significantly deteriorate. Okay, of the economy, right? And T.S. Lombardi had a great write-up. I think I liked it, so I can pull it up here. Just in charts, they do a great job with charts. You can look at here. Come on, where is it? Hold on. I didn't like it. Kill someone. Hold on, I can find it quick. But I'll show you just in a few charts everything I'm trying to explain to you. Even when I try to get prepared, I can't get prepared. Here it is. Okay. So here was that aggressive tightening cycle, right? The hiking from the Fed. Okay. Here are financial conditions. Now, financial conditions is the turquoise blue line, and you can see that's coming down. A lot of like the Bloomberg Financial Conditions Index. There's quite a few of them out there. Goldman has one, as you know. It's already as loose as it's been last year. Okay, so different measures, but they're all similar. Here you could see this financial conditions index, basically you're back to the zero. So anything above here would be tighter financial conditions, and anything down here looser, right? Here you had off COVID, major QE, right? Here's 2009, the low, okay? So we're right here right now, that blue line. And I like how they overlap the PMI manufacturing, so you get an idea of the economy as well. And you can see how the economy, right, they move in sync, right? Sometimes you see the one lead the other in a sense. And PMI is already contracting, right, and showing a slowdown. And you got this stuff following it behind it, right? So that's everything that's happened up until now. Okay, and they look at household loan rates, corporate borrowing rates. They're showing you everything, the effects of the tightening that have taken place. Okay, banks start to tighten credit. Right, this is all the stuff that we're seeing manifest from what the Fed has been doing. Okay, now they bring up 2008 because what they're trying to show in 2008, and that's the market. Everybody, right? If you believe something in the market, right, with anything, with a stock, with just an overall thesis, you expect it to happen right away. You expect it to play out right away. And most of the time, right, almost all the time, it never plays out right away, right? Timing is everything. Stuff takes time, okay? And that's what they show here in 2008. Things started to unravel gradually. You know, first you had housing roll over, then construction eventually started to roll over, then employment started to roll over. You know, so it was almost starts off like a rolling recession is what happened in 2008. Okay? And, you know, again, we don't know if it's going to end up play out similar to 2008. Doesn't look that way now, right? But only time will tell. The market, in what they're pricing, okay, they're either pricing a soft landing and the Fed to get it exactly right, or shit to blow up come the summer, one or the other, if they're looking for rate cuts, right? So they give the example here of, you know, where we are in the cycle compared to how 2008 played out, right? And the length behind it. Where is there something else here? Going into U.S. markets tighten ahead. Oh, and they just make the point that the Fed these days, the Fed is very transparent, right? So maybe things tend to happen a little, the market starts to price things sooner than we're used to. All right, but it still takes time, right? So we're in that spot now. Okay, so what we're looking for is one or two things. Okay, either the Fed needs to step on the brake further, right? And the reason for that would be inflation starts to show some life again, right? They need to keep financial conditions tight, especially if that's the case, right? So that's something that we need to keep an eye on, one scenario. Or the other scenario would be the economy starts to deteriorate and the fundamentals of the job market, we start to see cracks there, right? Or even worse, something breaks, and that'll put everything on fast forward, okay? And the reason why I'm saying those are the two things here now is because I think we are stuck for now in this so-called sweet spot until the market gets answers of those two scenarios. Does that make sense? Right? So I think we're going to be stuck in exactly what we're seeing. Okay? Rotation under the hood, individual name outperformance, the indexes range bound in a sense, right? Periodical spikes in volatility and then aggressive selling and volatility. We're going to continue to see more of the same until one of those two scenarios give. And one of those two scenarios have to give. It's a timing thing, right? Nobody knows how, again, the market's predicting right? And they've been wrong already. The market has been wrong already in pricing in how this was going to shake out. Okay, they expected at the latest, the start of this year, we were going to see some rate cuts. Okay, so the market, that's how difficult it is. The market's already been wrong, right? And then the market's the smartest, sharpest forecasting tool in existence. Okay, but according to the market, they're looking for, again, let's call it spring, late spring into the summer for things to start to unravel. That's my takeaway anyway. I don't see, okay, some people are saying the market's pricing in a soft landing. I don't necessarily see that because the Fed is not going to cut rates in July into a soft landing. I just, unless inflation comes crashing down below 2% and the Fed wants to get, growth going a bit. I don't see that. Is there a possibility? It's a possibility. But I think what the market's pricing in is that as reluctant as the Fed claims they are to cutting rates this year, that they're going to need to cut rates come July in the summer of this year. And for that to be the case, right, like I said, something has to give. That means all the stuff we're seeing start to manifest, right? And I think some of you just mentioned it. You talk about like the layoffs, right? A lot of these layoffs haven't even gone into effect yet. They go into effect over the next couple of months. So we're going to see some deterioration. It's a question of how much, and even worse, if something breaks. Okay? Again, the timing that's the most difficult part to all this. Okay? That's what makes it so hard. Not only do you have to be right as far as what's going to turn out, how everything's going to play out and how everything's going to develop and unwind, but when, right? You could be, if you don't have the when part, you can lose all your money and still be right. So the good thing for us, okay, is we're not forced to put big money on the line to make these predictions. No one's got a gun to our head and says, listen, you got to ante up your money, wager all your money, and try to predict when and how this shit's going to turn out in 6 months. No, we don't have to do that. So what we can do is, while we continue to look at the information on a day-to-day and a week-to-week basis, like we talk about on this webinar, okay, as long as everything is status quo, right, as we've been seeing throughout, okay, there are opportunities to make money in it. Okay, we just don't want to treat it as it's something different, right? As if it's the start of QE, a whole new bull market. Okay, so what's that mean? We want to be more, we want to be more tactical about it. Yeah, I understand the big money is in position trading, swing trading. I get it. But there are times where you look to pick up the money that way, and there are times when you're on a ridiculous bear market like we're in, and you got to be more tactical and just try to survive and make some money, right? So we continue to look at the information. We look at clues, right? The stuff we look at and talk about continuously. And until we see changes, we want the game plan stays the same. Okay. I understand everybody is drawn to the prediction and the certainty out there. That's what everybody wants, right? You see it on Twitter all the time. Somebody makes a prediction, they happen to be right, boom, everybody flocks like it's like God came down from the skies. Okay, like every single prediction they're going to make in the future is going to be right. Right? You have to try to prevent you from chasing that. Otherwise, you end up running into a brick wall in this game. Everybody chases certainty, and there's no certainty in this game, especially in an environment like this. You know, so it's that simple. It's difficult, but it's that simple for us. Want to see order flow being discussed in real time? I'm on a live broadcast during market hours every day where I call out the most actionable orders and point out important sentiment and positioning updates throughout the day. Go to wallstreetjesus.com/the Steamroom to apply for a 30-day trial and check out our community of traders. If we acknowledge, okay, and whatever that may be, for some of you, you may want to be more aggressive about it, and you want to be prudent about your entries. You want to be quicker on your exits, but maybe you want to carry some overnight risk and swing, right? You size down and swing a position or two. That's fine, okay? But as soon as the information changes, right, you have to be willing to change with it, no matter what. Otherwise, that's where you get buried. That's where you get buried. Yeah, and that's it. I mean, it's the greed factor. You see some of the early winners continue to move higher. Right? You see a stock like we're looking at today in this, Steel Dynamics, and you buy something today and you want it to be Steel Dynamics, right? You want your stock to turn out just like that. But this already happened. Okay, all this stemmed from the lows in October. You understand? Steel Dynamics was doing this until everybody got short in the hole in October, right? That was the sweet spot. And then you had new leaders, the new regime stocks, do this. But that happened already. You understand? We can talk about it. We can look at these things, right? And to be prepared for the next time we get a similar setup like we had back in October, okay, that's fine. But we can't treat, any new names we're seeing now that we're looking to play like we want to catch this from here. You can't. Okay, if you look, the majority of the big winners, they all sprung off of this. All. Okay. And listen, that was the low, right? But you got other names, okay, that like this, that basically, look at this, are lower than where Steel Dynamics jumped off. Okay, that's the difference in what we're talking about. Okay, that's the difference where when we get a setup like we did in October, we're going to look for those new regime names, stocks that are in play, everything we've been talking about the last few months. Okay, right now we're looking to trade because the new leaders already have pretty much gone parabolic in a sense. Right? So now we find opportunities to trade in Amazon because the stock has been a laggard severely and is bouncing. Okay, that's the only thing we're doing. But you can't, right now, unless we see something major change that we don't see right now, you cannot look to turn this into Steel Dynamics. That's what you want to try to avoid. All right, so and that October sweet spot setup with everybody off sides, it's going to take time. It's going to take time for that, especially now where, look what the main job of a bear market rally like we've seen is to do exactly what it's doing. Unwind all the short positions, flip some of those bears to bullish, right? The bears got cocky. Let's be honest. They were having a tough time in this bear market. No matter, right? But they still got cocky because what they thought they can do, okay, the bears thought that, all right, we figured it out now. We need to short this and then hedge here. You understand? And then short here and then hedge here. So again, once everybody sees that and thinks it's that easy, never works the same way, right? So then you got people getting short in this area here, right? Thinking tops, and they're feeling some pain, right? And that's why, honestly, unless we see something change in those two scenarios that we were just talking about, this can continue. This can continue, right? It doesn't change anything big picture wise, right? We could still be anywhere in here, and this market's not a new bull market overall. For certain names, they will be. All right, but right now, and we've seen it, right? We've seen it every time they look to try to add some shorts back on, they get squeezed. And now some bears are flipping bullish. Where's the hedge fund guys? I didn't post it. Is that the hedge fund guys? I didn't post it. The one thing, hedge funds are they're pretty much neutral anyway. Oh, here. This is a good example, right? CTAs. Okay. Here is into the lows here, right? So you can see here, right? That's about as short as they can possibly get without Armageddon in the picture. Okay. So even into weakness, right? They needed to cover. Okay, they're trend followers. Usually into weakness, they add shorts. But they were so short already that even if the market went lower, they needed to start covering. And that created the momentum for the turn here, right? And now here, you can see, here, they get to this point here. What do? They put some shorts back on. And now look, they're covering again. And now they're here. Okay? And now they're flat. Other models, you see McElliott's models and CTA models and some other models have them long already, not long. You know? So this is a drastic shift, right? And again, this is what bear market rallies do. And I mean, look at the short exposure, and the overall indexes didn't even rally as much as they did back here. But that's how much pain they've endured already to create sentiment change. Okay, now look, you see this, right? This is the S&P 500. Okay, this is the NASDAQ, right? While all that was happening, they were covering shorts in cyclicals, covering shorts in overseas related names, right? And still shorting NASDAQ. And we saw the same thing at the index level with the CTAs. Aggressive covering in the S&P 500 and the Dow, and continue to add shorts into NASDAQ. Okay? And now you see this is being covered. Hence, right? This is just happening. Okay, they were just short literally here. This is still short, I should say. And that's why you have a little bit of a lift here. You know? Retail. Okay, forget the passive investor that we talk about that capitulates at the end, right? We already know that. With the trader, the retail traders they've been blown up. They're hurting. The funny thing is they're not gone yet. They're willing to come back. You could feel it, right? But they've endured some real pain. Okay, and you can see, same thing, high weekly retail flow net turnover. Right? And now look, and it happens, right? A true bear market rally, right, eventually has even a chunk of the bears believing that they can't be bearish anymore. That's what makes it so difficult on the short side to catch these big down moves, right? You hear a guy like, what's his face? The guy who just released a note, I was ready to jump off my balcony after I read it again, who calls all these bubbles. He's been right quite a few times. Jeremy Grantham, okay? I don't know if you guys saw the note, not Mike Wilson, even worse, Jeremy Grantham. He posted his new note the other day. I don't know if you guys saw it, I posted it. As bearish as this guy is, okay, you watch any interview, as bearish as this guy is notoriously known throughout his lengthy career for calling bubbles popping. He's made some crazy calls. He's got, as far as timing, he's got a nice handful of them wrong too, but way too many right, okay, because they're not easy to call. He called this one to a T, okay, maybe the timing a little bit off on, but literally was pounding the point home every day that this is a bubble waiting to pop and is going to bury all these little guys, okay? The funny thing is, I'm like, I want to hear this guy talk about his short book, okay? Because I told you, I heard an interview with Chanos talking about the short side. I told you guys, bears are, they all strive to be like a Chanos. You ask Chanos about shorting, he'll scare the shit out of you. You'll never go shorting again in your life. You talk to a guy like Chanos, okay? He'll strictly talk about about how much you have to be hedged to even think about doing it. That's how dangerous it is, right? But getting back to the point, Grantham on Bloomberg was asked how he's taking advantage of this. He's not even short. Can you imagine? The biggest bear out there is not even short. And they asked him why. He's like, well, I'm short some stuff, but they're offset with longs. You understand? So he's not naked short anything. If he's short a bubble stock, he buys a value stock that's been neglected to offset it. You understand? He gets long there. Like that's the only way he tries to catch this. The only way. And he mentioned he's not even net short. He's about flat. He's not even net short. Now, if you think about it, he's doing, his fund is doing great right now because value has caught fire and a lot of the bubble stocks have blown up. But right, you see the bears, the point I'm making, you see the bears on Twitter talking about how they're shorting and they're predicting crashes and all that. They're not talking about that. They're talking about strictly getting all in short and holding throughout the whole bear market, to cash the big ticket on the big kaboom. It's impossible. It's impossible. Right? And this was right. This was a little more mechanical up to this point. Right. They huddle their shorts. Exactly. But in reality, you can't survive these things. You can't survive these bear market rallies. Right. These have been quick and they've been over. Sometimes bear market rallies, they linger for months and months until you give up. So, the point I'm making is there's no easy money on either side, right? Right now, we're getting to the point, and you can sense the sentiment shift, right? The easy money's starting to look like it's on the long side, right? Dips are getting bought aggressively, right? Again, that's part of the process to shake bears out. And I'll tell you one thing, okay? For anybody super bearish, you could be 100% right. This whole thing may end up blowing up like we've never seen before. But I can almost promise you this market will make sure it shakes out as many bears as possible before it implodes. You know what I mean? Before it implodes. So, and this is part of the process. Again, listen, the moral of this, the moral of the story here, right, is that we want to kind of be in this game. The money is made anticipating, right? Unless you really have faith in your trading skills, right? The true traders, and there's only a few of them, right? They can be reactionary. They can react, right? Not worry about their emotions getting in the way, and they can trade every day and make money. Okay, that is almost as difficult, if not more difficult, than being a professional ball player. Not many can do it, right? So the money that a lot of traders like myself and whoever has been in the game, you got to you have to try to anticipate a move. That's how you're gonna get paid. Okay, because reacting, there's always something that gets in the way psychologically, emotionally, always late or early, whatever the case may be. Too late or too early, I should say. So the point being is that we strive to anticipate, right? But now, in the current environment we're in, we can't do that. We have to be real traders here. Okay, as difficult as it's going to be, we have to be able to react. What do I mean by that? I'll give you an example. Okay, a couple days ago, Microsoft warned. Okay, blood overnight in the futures. Everybody all bared up. It was very easy to build up a bias, get bearish. Even if you were bullish, crawl into your little hole, right, and just get out of the way. But the reason, the point I'm trying to make by being reactionary, there you see, right? The selling, everything looked like shit. The flow looked like shit. Finally, the market bottomed out. Things dried up a bit, and then lo and behold, out of nowhere, some buying came in. Right? That's what we want to react to. That's what we want to react to. If it's there, boom, we try to get in the middle and make some money. If it's not there, no reason to try to anticipate it, because if you're too early and you're wrong, it can be extremely painful. So that's what I mean by that. That's what I mean by that. Okay, like most of you know who've been around me, right? We look to anticipate a lot, right? Almost everything we do, even if we're reacting off things, we anticipate something happening, and when we see it, we react, right? And now we want to try to solely rely on our reaction skills, and the best way to do that without getting in trouble is by being quicker than normal. The greedier you get, most of us anyway, relying on those reactionary skills, the more it's going to cost you money. The more it's going to cost you money. Yeah, exactly. And that's the other side of the cake. Exactly. You got to be able to pull the plug if you start to see something that you didn't think would be there or shouldn't be there. You have to. Okay? And that's like what I'm saying with the stuff we look at every day, okay? Like these credit default swaps and spreads, okay? This is where they're at right now, right? Again, mirror image to the price action. You don't even know what follows what anymore. They move so in sync, okay? But if we start to see this, right, materialize, we cannot approach the market the same way we do now. We can't, right? As much as like we would like to be content and do everything we're doing right now, when we start to see some signs that the Fed has either something's broken or the Fed is stepping on the brake aggressively again, we have to try to sidestep that. we have to try to sidestep that. So like, whoever made that point, it was a good point. If we see that, we can't be blinded by it just to be comfortable and continue to do the same things. Oh, all right. So here, so you know what I mean? We can't just keep doing the same things we've been doing. And if we do that, we're going to be okay. We're going to be okay. You're going to have, like this week, there were a couple, I'm sure for a lot of you, if I had good days, you had probably better days. For the last couple of days, the last couple of weeks, they've been decent, right? On a tactical basis, on an intraday basis. Okay, that could all change. But for now, we look to take advantage of it. Okay, if one day things start to change and it costs us a little bit of money, so be it. Yeah, and we just don't know, right? We just, as much as we would love to rack our brain and handicap it and try to figure it out, there's just no way of knowing. There's no way of knowing. That's what makes like these exogenous events in bear markets. That's what makes them exogenous. You don't know when they're coming. You know what I mean? You never know when these things show up. I told you in 2001, we went through something similar like this. Okay, things were starting to stabilize a bit. There was a lot of agony the markets went through. Who went out of business? Enron, WorldCom, internet names. Whoever was still around, bouncing, the whole 9 yards. And then a couple planes went into the Twin Towers. And that's it. Right? That's all that was needed to unravel everything. Yeah. Especially, in this environment, forget it, right? If you got the Fed already thrown in the kitchen sink like they were doing into the COVID lows, that pain could be absorbed. Maybe you have a little flash crash couple of days or week, and that's likely the bottom, and you get a V-shaped rally to new highs. But not like this, So again, I'm trying to make the point that you don't want to be too scared, and you don't want to be too content, right? Because either one will eventually hurt you, right? If you're feeling too good because things are looking, a soft landing is getting priced in, Goldilocks is getting priced in, and you're holding a bag of names that you may be up nice on. As soon as that thing happens, that usually happens in bear markets, you're done. Just like that. Just like that. So just, if you want to hold a stock or two, you got some cushion on, that's fine. You just don't get caught with a bag, in this environment. The easy money, believe it or not, if we could rewind it, fine. You can't do it. But the easy money was made off the October lows. And ironically, it wasn't even made here predominantly. It was made overseas. For a variety of reasons, but one, we talk about short covering, they were short out their eyeballs, Europe, going into the winter months. Okay? Here's COVID, they were even more short than they were into COVID. Right? I mean, it was an easy short. Winter's coming, Putin bombarding Ukraine, locking up oil, pictures of Germans chopping up wood in August, getting ready. Right? So this added fuel to the fire of what happened over there on the short side, squeeze wise, and look, and that'll get you this. Look at this. Like if the NASDAQ looked like this, there wouldn't be a bear left in town. You realize that? If the NASDAQ looked like the DAX, They wouldn't be a bear left. And what's scary is, it doesn't have to happen, but it could, right? I mean, it still has room if they want to wipe them all out, right? They can still either grind higher or chop it higher if they want and wear them out still. But that's why you got to move like that. Easy short. What else I got here to show you guys? Here's the earnings sentiment, right? It's happened every quarter. Look at past couple quarters. They get bared up into earnings. And then, you know, unless earnings are a debacle, what you see is some selling and they buy them up. We already started to see that. So that with Microsoft, you see it with, how about Boeing? Boeing was down like $8 in the blink of an eye. It was green. You know? So I really, listen, I don't know how long this goes on for. And like I said, you don't want to try to predict it. You don't want to try to predict it. We just, when it's over, and we change our game plan. You know, we change our game plan. But in the meantime, all the riffraff, what they've been doing since late spring to summer, okay, either calling for a new bull market or for a crash, right? That's all every riffraff and their mother's uncle's been doing. And guess what? We haven't gone anywhere. You know, we're in the same spot that we're in since April. So from April to here, you had a couple extremes. Otherwise, you're in a trading range. And like McBob, I saw you before. Like McBob thinks eventually the range might get even tighter. It's very possible. If that's the case, I still think that's a good thing for us because I think we can find opportunities in names, you know. I think the risk for us is the last thing we want to see is this thing get too carried away, you know, because then the bear market accomplished what it needed to accomplish, right? The longer it does this, the more we can find opportunities in names. Yeah, I mean, if it's coming, then that's it. Case is closed, you know? If it comes, there's a lot more risk that comes with it, you know? That's the problem. Well, like I said, you know, people were expecting it in 2001 and 2 planes went into 2 buildings. And I know you're like, oh, well, what's the chances of that? And let me tell you something. In bear markets, okay, the probability and the odds of shit like that go up significantly. You ever realize that? Significantly. Right? In bull markets, you know, bad shit happens, comes, it goes, you forget about it. Seems like bear markets, I don't know the reason why or how or who or what's behind it, comes out of nowhere. I'm telling you. You know, maybe, yeah, who knows with this Russia shit? I don't even know what's going on there. Sending tanks there in 4 months, giving Putin a heads up 4 months ahead of time. I don't know what's going on over there. But I'm just saying that there are balls in the air. You know what I mean? There are balls in the air. And listen, as this rally started, right? No one believed in it at all. And you see the rhetoric starting to change, right? Soft landing, the Fed's doing their job. They were ready to put a bullet in Powell's head 2 months ago. You know, now he's on top of the ball and everything's beautiful. That's how sentiment shifts in this type of environment. That's how it goes. So we gotta keep our eyeballs ready. All right. Meanwhile, you want to talk some names? Let's talk some names. What'd you guys play today? CRM was the best of the action, hands down. And what's funny is when you're in this consolidation, right? Like we're talking about names, it's not only on the bullish side. Like most of us are just long only. Like for me, right? I'm playing the equity. Okay, I'm not going to short anything. I'm not going to do it. Right? If I needed to short anything, I'd buy puts. Right? But I'm trading solely equity, so I'm not going to even think about shorting anything. But there have been opportunities on the short side too. Now, again, maybe not in the names you guys like to trade, but some of the most aggressive action out there, off the top of my head, I can name two that were blatant, obvious top action type plays, right? And yeah, you got this thing, and we found the reasons why, right? Came out with news, a short hit piece, and this one came out with news and a short hit piece, MPW. Right? So it's not, and I'm sure as there are going to be bad days in this range, even if we're in this range, there are going to be more opportunities on the short side as well, where you're going to see the top action being aggressive put buyers. But there's been some decent call activity. CRM was the best of it today. Some of us played it. Hella sold it too early. Others held it a lot longer. Nice job. AARY, there was one sweep that was pretty big size for it. It wasn't where they kept coming, Mark. Like in other words, what I mean by top action is not just one sweep can mean anything, right? Especially during earnings season. When you see like MPW, put sweeper, another put sweeper, right? At the time, there wasn't even any call buying to get excited about. Like our eyes were only on MPW put sweeps, right? And you saw the stock, the momentum start to turn. Then the next day, put sweep, right? And then boom, today, short hit piece. And they started rolling some puts. The India, who the hell's watching this thing? But one after the other, you can see, the best way to explain it, it's an appetite, right? If somebody has information, okay, and somebody is excited about a trade they're putting on, or from good intel, they're not going to hit it once. These funds are going to leg into it. They keep coming, right? And the same thing happens on the call side. The problem with the call activity is in the active names like a Tesla, that happens every day. You understand? But names that don't trade as much, like a CRM, right? The action stands out more. So CRM, there was one monster order, and from that point, just tack on sweeper activity. And you already had news of Elliott and all that behind it too. And then it caught a headline, right? And then I sold it into the headline. And then it rattled off another $2-3 after the headline. And they kept coming after it, right? So that's what I mean by aggressive activity. That's what I mean by it. And that action in a bear market, you're not going to see a ton of it. It comes from time to time. But that's for what we're looking for, especially, for a real edge off the flow. That's where you're going to find it. Because in this environment, no matter what size the sweep is, one order can mean anything, Could be replacing stock, could be rolling a position that's underwater, could be hedging a short or hedging a long, could mean anything. But when they keep coming, that's when you got to take notice. And, you don't wait till they pile in for 3 days and then take action. Again, you see it, we're in the middle of it, you want to get in the middle of it, right? And it's almost like you're looking to take advantage of this fund accumulating. You're not even looking for them to be right necessarily. They don't have to be right. You know, like MPW, you could have sold before there was even news and made money. CRM, same thing in a sense. So that's what you're looking to do. That's what I mean by real aggressive activity. That's the best of the action. And it's, it's more rare. But again, we're the generalists. We're going to look to trade off anything. What other names did you guys trade today? NU. Is that the scooter? What is NU? Is this the scooter play? Brazilian banking. I get them all confused, bro. Brazilian. It just sounds familiar. I thought it was a scooter. Chinese scooter. That's not it. Square. The problem with Square, you have so many bag holders in that Square. Okay, look at this. Let me show you, so you know. Square is the ugliest flow for a name that you can find. You know what? Uber might be up there. Quite a few, right? You hear me talk about it all the time. Messy, right? Just messy. This was open interest, the changes, okay? So from all that action yesterday, this wasn't bad. A couple of those sweeps stuck. But, you get some closing action here. You get some call writing here. You understand? So now you see 3, 4, 5 sweeps in the middle of the day, and you're thinking, oh, shit, they're hitting up Square. But all around it, look what they're doing. They're closing, they're selling calls, It's just so messy every day. There's never clean flow in this Square anymore. Yeah, I think that, you know what it is? This stock, I don't think you guys realize, it's been so long. This thing was like a prize item back in the day. You guys remember, right? With Dorsey, like Square was the next Microsoft, Every fund was in it. There's so many, PayPal too, exactly. So many people trapped. Look at this. What are you going to look at this? Okay. Here are the lines in Square. look. And that's why, guys, if there's aggressive activity, okay, I know you like certain names and you want it to be real action, okay? I promise you, even if I don't like the name, okay, whether I'm playing it or I have no interest in it, like INDA or like MPW, if it's aggressive, I will make sure it's clean and it's aggressive. I promise you. All right? I promise you. And if it's not, even if I'm playing it, I will tell you that it's not. I just think I can catch a bounce in it or shit like that. Okay? That's my job, is to make sure, my only job is to make sure you know about the legit action, because that's the real edge out of all of it. Okay? This is a menagerie. This is a menagerie, right? So now we saw, I think it was 3, 4 decent looking sweeps. Can you make heads or tails if somebody's accumulating a position in Square? Look at this. How do we know whoever that was didn't shut down these weeklies? Right? I mean, look at how much went off on the bid today. So that's the problem with Square. And that's the problem with a lot of names like a Square that used to be darlings and are out of favor now, right? The stuff that is not as active, you'll be able to pick up the edge a lot easier. So that's the problem, Damien. Now, listen, you like Square for a trade, and you're hoping the couple of sweeps can provide momentum for you. That's, again, you're not solely trading off the flow. You like something about Square, technicals or gamma, whatever it may be, and you're hoping these sweeps maybe provide some momentum. Sometimes they do, even if they're not clean. Square's been moving off the action. So, I'm going to tell you whether it's clean or not. And if you see, a few sweeps in the name you like and you think it can help you catch a bounce, that's a different story. Yeah, exactly. So, What else? What else? I'm trying to think what I played. I didn't play too much today. Again, the flow started off really dull. You had CRM. As a matter of fact, I played the two names that caught flow. Yeah, CRM and this. Those are the two I played in the morning. There was nothing else. You know, there were Amazon caught a little more flow. The Amazon flow has been decent of late, right? For maybe a couple of weeks now. But as far as any newer action, CRM in this tour, you know, for a little stock, this thing closed nice. Oh, I didn't tell you guys the lotto I played. Now, here's a perfect example. Okay. I bought a penny stock. I held a penny stock, and I'm going to hold it. It's a lotto, flat out lotto. Okay. The flow was nothing special. Okay. It was cheap action. I think they were paying 20 cents or some shit overnight. Yeah, overnight. I got overnight exposure, baby. But all kidding aside, I bought some of this. Soon. Hey, I finally cracked, and I end up buying soon. Now listen, here's my rationale. Okay. The reason I played it, one, it's a lotto, it's a dollar stock. When will I ever find a dollar stock, AI dollar stock, that caught sweeper activity? Nevertheless, I'm never going to find that again. I bought the equity, and I posted it. I don't know if you guys saw. I posted it. I'm being honest with you. It's $3 or bust. What I mean by bust, if it breaks new lows, I'll probably just get out of it at that point. You know, but I'm looking to catch hype on this. You know, that's maybe chat BTA. They put a price tag on it. People get excited. They start looking for AI stocks, and this thing catches volume and runs to, I got pipe dreams, you know? But this is a perfect example. Again, the flow, peanuts, not a lot of money. But yeah, pipe dreams. You know, out of all the things, out of all the half decent looking companies in action out there, can you imagine Soon is the one I'm actually going to carry overnight? Yeah, you hit the nail on the head. I'm a degenerate. Mm-hmm. Yeah. Yeah. And that's what, here's what I did, right? I bought it for a day trade initially, okay, just for a scalp. And then I looked and I said, what do they do? And I see AI in the name, like a real degenerate. I said, what? A dollar stock AI? With all this chat BTA, whatever they're talking about? I said, let me just hold the thing. All right, I'm going to scalp it. For what reason? You know, make a little money. And then if I'll be more sick if this thing goes to $3-4 somehow and I scalped it. You know what I mean? I'd rather not own it. No, Ani, I'm not chasing it, right? I'm not chasing it. It's dead. If it ever catches news, maybe I cash a ticket and it'd be worth it. That's all. Listen, again, I just want to make it clear. It's worth a roll of the dice shot. I told you guys I've been fiending. I need to take a shot somewhere. Otherwise, I'm going to lose all my money at DraftKings, and it defeats the purpose. You know, I have to. You know, not even a shot. I needed just to own something to cheer. That's what I needed. Oh, no. That's one thing I'm not going to do. That's what I promise. I am not selling this thing. Honestly, it's $3. Even if this thing opens up at 2:30 tomorrow. Okay? $3 or Gatsangul. Yeah. By GameStop. I'll never let myself live with that. Never. I can't do it. I can't join the ape club even for a day. I can't do it. But yeah, this caught a little bit of action. You know, the other name you guys are talking about, I know some of you liked it. This is probably a better spec play, this tour. Right? This is a China travel name. But the only difference is this is already moving, right? This already is moving. That's the difference. And this thing caught better action, more money anyway, more money. Yeah, look, why can't, this is all we need to happen. It'll satisfy us. Look at this. 50 cents to 2 and change. Tiny stocks. Unbelievable. I saw some of these Chinese stocks up again, right? Look at, you want to see something? Baba, no sellers, nothing. No sellers in this Baba. How is nobody selling this thing over here? Look at this. What the hell else did I play? I played one more thing. CRM, Soon, Tour. I played one more stock in the afternoon. It wasn't any crazy action. I might have played 2 more stocks. No, Billy, I was thinking about Billy, but it was up, and I didn't feel like chasing it. But Billy's had decent flow. Deer should be a Kathy name if she wants to turn around her VIP scored some action. Wasn't FCX? There was a little nibbling. I played FCX. A little bit of a bounce I caught. Nothing crazy. It was down a little nibbling. I thought there was one more. Anyway, what were you guys? PDD has been one of the, this thing catches bombs too, this PDD. Jesus Christ. My God. There's some ripping these things. New core, how about this? This stock, and we were talking about this in the room. If you want to make a play on steel, okay, it's very simple. They already had enough flow, okay? You can buy them on pullbacks or whatever the case. But if you want to make a bet, your bullish steel, you buy STLD or look at STLD, okay? Look, you talk about new leaders, new regime, right? Like new names, not Amazon, not Tesla. Look, crazy. Stud is an understatement, right, Robert? And here's the thing, okay? This thing has been out of favor for a long, long time. If you look at the numbers, you'll think it's a misprint. Misprint. They earn, I think they earn $4 a share per quarter, okay? On $5 billion in revenue. Yep. So these are, the commodity plays that kind of, everyone's talking about like the energy and stuff like that. This is some of the stuff no one's even talking about. I honestly knew they were doing well. I didn't know that they were doing this well. I didn't know Steel Dynamics. I mean, here's like, I remember this. Remember, this was the consolidation after the initial rip. But again, off that October low, a rocket. Yeah, Deer, this is just, there's nothing much to say here. You got consolidation again here now, and would it surprise you another move like that? This thing's a beast. Goldman. That's interesting, right? That's interesting. Caught some action too, Damien. April's. Yeah. Yeah, that's a good call. That's a good call. That's a good call. And you got a dip here, right? All right, you got some bad news. Like, this is where you're going to look to buy these things if you like them. Yeah, the financials are just not sexy, right? That's the lilac. T, what were you talking about, T? I lost your message. Yeah, lilac. All these names, I don't know if you guys have been playing them. I know some of you, here we were talking about, we played these guys. These names, what a rip. WBD, again, we say what a rip. Look at this, okay? Look at this chart. Right? It was overdue. And then you zoom in, now there's a big rip. And power, yep. Let me see what T was saying. Oh, CVS. That looks good. Bottom of the range, right? Is that what? Yeah. CVS. We spoke about this, T. I'm surprised CVS is not, like, I understand the weakness recently because there's been some profit taking in these names, but I don't understand why this thing is not doing a lot better than this. I don't know if they have issues or whatever, but CVS is a legit name. Yeah, but this is a nice spot anyway. This is a nice spot. Maybe he'll catch a bomb, T. You know what I mean? Maybe he'll catch like some real buying. And honestly, this would be something you would look to possibly swing. You know what I mean? Ideal spot. Ideal spot. Yeah, you would want to see, some respectable action come in, because I've seen CVS catch real nice flow when they buy it. When they buy it, they buy it. They hit it hard. So you're not going to miss it when they come in. Melly, that's on the other side. That's more, wow, that's a nice move here. This is more of play it now, squeeze now type thing. So you're kind of riding the momentum, and then you kind of want to pull the plug when the momentum dies. Melly has, is that why it's moving? Brazilian, right? Brazilian name, I think. Yeah. Speaking of Brazilian, this name caught real nice action today, but they have earnings in the way too. Pags. Another name, overdue. You got some time, earnings. 223. So what I would look, if you get if they pull it back and then they show up again, even for a trade, I played this name like that yesterday. I missed it the first time around, and then I caught it yesterday. Oh, it was up today a little bit more. ESTC. Caught some nice action. Earnings, catches earnings, but they're in March. So you got a little bit of wiggle room here. But I've been playing mostly, these are the names you guys know I'm trying to avoid. But the last couple of weeks, this is where I've been looking because they haven't moved. Like if you saw what I played yesterday, exact opposite of what you would want to swing in this mess. I played Roku. I played that ESTC. I played the crap of the crap. There was another name, probably the worst of them all. I played AI recently. Right? I mean, these are all bleeding money. But again, they got momentum, I can't, the names that are up in the sky stuck like this, right? Like we were saying, I can't play this here. I know even if it's catching action, I can't buy Baba here. I can't do it. Netflix too has been red hot on catching action, right? Sometimes Netflix is down at least. I mean, McBob, when, I mean, there's gotta, and this is where I've been totally wrong, okay? I really thought, like we were talking about, I thought we were going to see the rotation into the beaten down NASDAQ names, because that's where all the shorts live. But I thought, I thought like the China names and some of those names would cool off. Not yet is right. Not yet is right. But that's where I've been. Yeah, well, listen, if anything can overshoot is those names, because they overshot to the downside, undoubted. Yeah, and they got quiet time now. Their markets are closed there. So, but that being said, again, it's like playing musical chairs. You got to be careful. You don't want to get caught buying these things and then boop. The casinos, they look really good. They do for a breather, but you know, yeah, maybe. I think just, you know what I think, Damien? I think the majority of these casinos, the Macau related ones that got killed, that have Macau exposure, those are the ones that are really squeezing hard. Yeah, the Asia exposure. This is the old MPEL, Macau Melco Resorts. You know, big move. Musk says they will be more valuable than Apple. What, the casinos? You know what's crazy? You remember when Wynn and Steve Wynn was around? This thing was a beast. Oh, Tesla. Uh, um, this thing was a beast once upon a time. MGM. Yeah, there was some bullish action there too. So it was kind of mixed. I think just some earnings protection into strength. We saw a couple of names. Yeah, we saw a couple of names catch a little put action. But yeah, MGM LVS is the one though. This was such a difficult trade too down here. Caught some big action, but they were early and it was agony over here. I mean, it was just couldn't hold a bid. It was a mess. Boyd, oh Boyd, I forgot about Boyd. Wow, that doesn't look bad at all, right? Trying to clear this mess. That looks good. Yeah, they have earnings February 2nd. You know, maybe you'll get a little. See, I was hoping, remember we were talking, I was hoping LVS. I thought they would sell the news. You know what's funny? LVS, the earnings weren't even that good. And the stock ran anyway. Yep. So I thought exactly what they did. They report a quarter like they did, and we would see selling, and they would buy it up. That's what I was hoping for anyway. But they just gapped it up and it ran. See, Boeing did that. Look, you can't even see. Boeing was down 8 yesterday. Can you even see it on this chart? You can't even see it. Right? But look at what an entry that was. What the, wow, that's messy. So here. Whoop. And you had 2 chances at it. And then today they gave you a little shake and bake. There's so much demand for this stuff right now. Damn. Yeah. So, and you know, Boeing is another one of these names. I like Boeing. I think Boeing is one of these in favor names. There's just no sellers in there right now. None. What did that EMR do after the poll? Anything? Oh, it's starting to bounce a little now. You know, this is an entry here. And this, you know what this was? They're rumored to buy somebody. That's what this was. Intel. I mean, what's wrong with Intel? What's wrong with this stock? Can it ever have a good quarter? Look at this thing. Yep. There was some put action there today, too. I know earnings, but geez, this thing's a dog, huh? Yeah. And here's a good example, right, McBob, of a superstar back in the 90s. And they're going to pay that dividend? They're good for that dividend? Jesus, 5% dividend. They still don't want to buy this thing. You know, this kind of reminds me almost like when Micron went through that stretch. It was trading at like 4 times earnings for like 10 years. Yeah. An AMD. But you know, some of you don't even remember Intel being the stud. Like, forget AMD was the dog, Intel was the stud. That's a great stock too, Dylan. That's in favor play. That's a new regime play. Valet. It's a good stock. Buy dips. Yep. Yeah, try to buy dips. Valet. All of them really, there were a couple names that were in consolidation. They all hatched now. BHP. Look at this guy. You know, this thing was languishing here. Why does that chart look so wide? And then look at this rip. You know, these are the new regime plays, my friends. Rio, that would fit the bill. Yeah, I don't really follow that stock. It catches slow once in a while, but yeah. Yep. Rio, definitely. See, Khalid, the point I was making earlier is, you know, now we're here, right? You would like to see a little bit of a breather here, you know? Like, this is a big move. This is a big move. Well, you guys are saying a lot of these things just keep going. I don't, you know, who knows when they chill out. But they're going to chill out. You know, maybe it goes tests highs. It's right there. And then runs into a little bit of a breather. Very possible. You know, kind of something like this. And then do that. Oh man, the run on that thing, the Argentina Bank. Gigal. Look at that. Oh, Jesus. Yeah, that's, you know, that's why I told you guys, I've been playing mostly the NASDAQ names that I've been telling everybody to stay away from for months. You know, just because I feel like I have a handle on them a little bit, you know? Like I can't read stocks like this. Like I unless, you know, they're down and you know what I mean? You want to buy them while they're down, they snap back because they're stuck here. That's the only, but if they're up, I like, it feels to me like, you know, you got a little bit of upside and you got the potential for whoop or get stuck in consolidation. But even day trading them, I'm really uncomfortable day trading these things. Mexican Airlines. I don't know that one. What is it? Is that the symbol? ARS? Mexican Airline. What's the symbol, T? Oh, Azul. Is that what you're talking about? Azul? Azul. I don't know this stuff. Azul. What is this? This is Brazilian Airlines? Oh, he's talking about something else, Pat. Oh, Jesus. Where'd you find these on a cartel play? On a scan? How'd you even know about these? A scan, right? It's amazing, right? All overseas names on fire. On fire. And they can have, you know, they can have a lot more left, a lot longer to go. Like, you know, we're just talking about breathers here. You know, they've been out of favor for a while. Well, this hasn't. Jesus. ATSG. I think I know that stock from somewhere. ATSG. Yeah, I think I've seen this one. Can you imagine, T, that there would be the day that we would be talking about buying Argentina related names? Can you imagine where we're at here? Can you believe this? Amazing. I see that. Right, on. Good call. The dollar has helped a lot. A lot. Look at this. Look at this. That's huge. So that's probably when they chill out, right, Ani? When this finally turns a bit. That's probably what everybody's waiting on. There's going to be a bounce, I'm sure, right? I mean, this is, you got this pretty stretched here. You know, you got exhaustion already showing up. Maybe after the Fed. Yeah. Right. The shorts have been piling in these the dollar, right? And then you get the whoop. Yep. So, and that's the other chart I brought on here to show you guys that they could possibly close the gap a little bit here. Wait, oh yeah. So this is the underperformance of the US markets, you know, to overseas. Due for a bounce. But you know, here's what could be misleading about this. You could just, it doesn't even have to come with upside. You know what I mean? Like you could just have outperformance. I'm sure some upside would be involved, but doesn't have to equate into all upside. That's another reason why who knows with this market, when that happens, I don't even know what happens to the indexes. If the dollar rallies, you would think the indexes probably come in, right? K-Web. What a cash register this K-Web turned into. Well, you had this niner here. There was a little breather for what, 4 days? And then just right back higher. I mean, that's a sign of strength right there. But I think Ani's right. I think, T, if you like these names, I would just, honestly, I would just pay attention here, you know? Oh, Harnet's been money, T, right? Harnet's been so money. Like, I honestly forget about, like, that's what I mean. Everyone gets wrapped up into like what the market, the S&P 500 is going to do, you know? Forget about that. Look at like everything else he said. Money, absolute money. You could have knocked the covers off the ball in a full-fledged bear market off Hartnett. No, I didn't see him on CNBC, but I read Marco every week. Marco's all bared up. Yeah, Hartnett. Yeah, Hartnett thinks 4,200. You got to be a seller there. But you know, he said the pain trade is upward bias for now. Still, you know. Yep, 4,100. Yep. But yeah, that makes total sense too, right? That's like here, you know. I know that's well said. Like people don't like that. You know, I like that because he doesn't get caught up in a prediction, you know? There's no such thing in this game. You're 100% right, T. You know, if you're gonna not even tail somebody, but if you're gonna read somebody or listen to somebody and acknowledge what they're saying about anything related to the market, you want them to, if they're wrong or they need to adjust, you don't want the person who's going to hide and just stick to his guns just because he don't want to be wrong or change. Yeah, dude, you can't. I mean, you can't predict this stuff that far out. You know, like he thought. Again, like even a lot of us thought that it was going to look ugly at the end of this year. Okay, we're into the first quarter. It ended up becoming consensus, and once you start to see that, you have to adjust, right? You have to. Yep, exactly, exactly. Sam. Oh, that's the VIX tie, right? Yeah, yeah, yeah. Yeah, Vol. He knows his shit, right? With Vol. Okay, you know me. you know, a lot. I pay attention to what a lot of people have to say, especially the reputable ones that I followed over the years. It doesn't mean like look at Kalanovich. You know, he was wrong. But you know, you're talking one of the sharpest guys on the street, Kalanovich. You know, he's just his last call was wrong. And now you know, now he's flipped to all out bear now. By the way, um, but you know, he's kind of I wouldn't say stating the obvious, but you know, he's a smart guy. He sees what's what's coming in a sense. You understand? He said yeah, yeah. Like I'm not even saying that, you know, just like, oh yeah, he's a smart dude. Like he's literally a really intelligent dude, you know? Yeah, he's like a nuclear physicist or something like that. Um, but you know, he's made some crazy calls, Kalanovich. You know, sometimes it doesn't line up like with what I'm seeing and looking at, and that's fine, you know, whatever. But when he does line up, it gives you some conviction. Yeah, well, he's saying that the Fed is going to break something. It's almost impossible for the Fed not to break something, you know. And what he's saying is, when the Fed breaks something, you don't see it breaking ahead of time. Kalanovich, T, you know, by time you see the Fed has broke something, it's too late. That's his point. You know, but he made a point. He don't see how it's possible that the Fed doesn't break something out of this scenario. He was on CNBC recently. I didn't see him on CNBC. I read his note. When was it? Tuesday. Oh, so maybe off his note he went on there. Sometimes he goes on there. But you see, T Hartnett. Do you see him anywhere on these shows? He don't want that exposure. You know what I mean? He don't want the mopes hailing his calls. Hartnett. You don't see him on any of these. You never see Hartnett anywhere. A lot of the riffraff don't even know who Hartnett is. Everybody on the street does, though. Yeah, so but that's Kalanovich. You know, I agree with Kalanovich. Again, it's the timing thing. I agree with Kalanovich. I don't see how it's possible. I don't see it, you know, soft landing. I don't see it. I don't see it. You know, if everything, oh, I see it in the room there. So you know, thank you. You know, if everything, you know, stayed the same way it is right now, yeah, okay, you got a shot at a soft landing, but it's not. You know what I mean? It's not going to. And the Fed, you know, they think they have like a puppet on a string, you know, that they could control. The timing is impeccable. It's impossible. Look what they did with inflation, right? How long they waited to do what they needed to do. And now, they're going to do the opposite on the other side, They're going to stay tight, stay tight, stay tight. And by the time they, and we were talking about this earlier in the year. If you told me the Fed was going to do what it did, I would have told you, honestly, the S&P 500 is at 2,500. That's what I would have said. Right? At the end of 2021, if you told me that the Fed was going to do what they did, I would have told you the S&P be under 3,000 would be my guess. But it goes to show you, right, how much I know. But, people get bearish. Yeah, exactly. That's the thing, right? People get all bared up. Everybody starts to see the same things. And then, market does the opposite. But that's why it's tricky here. But I don't know about you guys. I've been compared. Let's be honest now, okay? Let's be realistic and let's compare to here, right? The action and everything we were doing here. I've been having a ball during this period compared to this. Like I didn't do anything during that trend. Yeah, right. The flow there was no flow. There was like call hedging and the active names. It was all weeklies, nonsense. Like the stock picking in here, no matter what you've been doing, right? How time frame was, it's just been a lot more fun. If you trade names, if you don't trade names, then it's a different story. We weren't talking T. Were we talking about any names during here at all? I don't think we were ever talking about names at all, right? Like, I don't think we brought up names, all macro, yeah. And now, like Ani said, the macro, you don't even really need to spend too much time on it, right? You just want to keep tabs on it, but focus on playing the individual names. Energy, yep. And that's what made that trade so hard, at least for me, right? Like energy would have to be the only thing to buck the trend in a bear market. I just couldn't, I didn't see that. I didn't see good odds of that happening. I thought it would outperform, but not the way it did. Yeah, Kate, honestly, I don't, as long as this continues, I don't mind it one bit right now. I don't mind it. I do not mind it one bit. Like, don't get me wrong. I would love a new bull market and, you know what I mean? New breakouts and new growth names, the whole big shebang. But I do not mind this environment, especially considering what we had prior. But this is stock picking. This is stock picking here. And listen, unless something breaks, I don't think this is going away. You understand? I think there would be periods when it goes away. So I'll give you an example. Let's say like CEO's taking about the hot CPI, right? Or the Fed slams the brakes, whatever the case may be. What you'll have is probably a downdraft like this. Everything, you get that high correlation where everything would be weak and heavy. Some will hold up better than others, right? And then what you'll see is as we approach where we're possibly going to find some stability, you're going to see some of the stuff that holds up better, some of the new regime names start outperforming, you understand, and catching action before even the indexes bottom. And I got news for you. That's going to be the launching pad for the new batch of names that came out of October. You understand? So it's going to be just like this. Okay? And again, you don't need the market to go too far. Okay? But the names that catch action, when that happens, the names that catch action, wherever that may be, okay, they're going to be the ones that outperform the most. And you're going to see a lot of the big winners from that action. Yeah, you're going to see whatever they start to buy, and you see bottom ahead of the markets. Those are likely going to be the strongest stocks to come out. And you don't have to, from that point, you really don't have to worry about the indexes. Later on, yeah, I wonder, what is it? That PCE could be, I mean, that PCE tomorrow is something that could be market moving, right? That's the one, the PCE deflator, I think that's the one that Powell pays more attention to, I think. Inflation gauge. So if you get a little, if you get that number tomorrow morning a little hotter than expected, you might, but listen, you get weakness and they pull what they did off the Microsoft earnings, they start buying that weakness, we got to play it. Yeah, you got commodities that woke up a little bit, you got, some stuff loosening up, not as tight out there. You could see inflation. It's normal for inflation to show a little spikeage from time to time. Very possible. So that would more than likely be the catalyst. What do you got? You got a winner for me? NCAA hoops, UCLA, USC under 134. Send it in. I like that. See, you're my type of guy, Khalid. NCAA hoops, and not even a side, a total. A total. That's a real gambler right there. That's a real gambler. Robert, always a pleasure. Have a good night, everybody. Thanks for coming. Have a good night. NFL. Let me see NFL. You're gonna. I'm embarrassed to say. Who's playing again? The Eagles are playing the Niners. That's actually a good matchup. Yeah, Cincinnati looks like the team to beat, right? I like Cincinnati too. Who they playing? Kansas City? Oh, Mahomes hurt. They're done. Be good, guys. Yeah, I don't. That Niner-Eagle game is interesting. Niners are pretty good though, right? I'm not big a football fan. I don't know. When's opening day baseball? Is it almost here? I got my baseball draft coming up. Hey, fantasy draft. I'm excited about that. Yep. Have a good night, T. Everybody, I'll see the majority of you mañana. How's the spaces going on Twitter at the open? Good? You guys hear me okay and everything? Everything, I mean, believe it or not, I'm doing it from my cell phone, so I don't know how the audio is and all. All right, good. If you guys have any input, let me know. All right, everybody, have a great night. Mañana trabajo. PCE tomorrow. Later, guys.